Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's closing grain and livestock comments. A good way to start a Monday, a bounce off the lows. We started off on our heels, looking pretty negative. December corn did finish the day up 3 3/4 cents. But more importantly, we traded down to 415. Looked like we were going to dance with 410 again. We were able to go back and settle above that little trend line. If you are reading my letter, you know what I'm talking about. There's a little trend line here at 420, 421. We've been kind of battling it out here for the past 5 days. Something to watch. The bigger level that I'm more concerned about is, can we go back and get that July 4th gap, which is around 433. Again, if you want the specific levels, take a look at the letter. I do the homework every day, so you don't have to do it. But a good start for a Monday. We'll see if we can extend it higher through the rest of the week. November beans up 6 3/4 cents at 1033 3/4. Again, same thing. We were on our heels early. It looked like we might take out 1020. We stopped at 1023.5 and finished the day at 1033 3/4. A good 10 cents off that bottom. December wheat Chicago finished the day up 8 cents off its low. It traded down to 516 1/4. The level everybody's going to watch in D Chicago is last week's contract low, 514 1/4. We did finish higher there. Is this just a short covering rally? Is this a temporary move? I really don't know. That's why the weekly moves are much more important than the daily moves. Again, but there's no two ways about it. Wheat is fighting down here in a knife fight. December wheat Chicago finished up 12 cents, 517 1/4 after trading as low as 502.5. I think a lot of people thought that we might go get a sub $1.05 print. We got very, very close. Um, the last week we got down to 501 3/4. Today we got down to again 502.5. So the market's trying to hold there at that $5 level. My worry is, if I'm a producer and I'm storing wheat, that you can store it, but just don't store it and ignore it. Make sure you keep a floor under it. Vice versa, if you feel like you just want to throw the towel in and say, I'm done with this, I don't want to own this wheat anymore, I'm just going to cut my losses and get out, that's exactly when you want to look at strategies where you can re-own it for the next 3 4 5 6 months, and you don't have to spend a lot of money, but it might be the best decision you make here. Anybody that tells you that they know where the bottom's in, or et cetera, I would take it all with a grain of salt. What I try and do is manage your risk. So if you're going to hold it, keep a floor with a put. If you sell it, absolutely positively re-own uh, a portion of it. I don't care if you re-own 25% of it, 50% of it, but re-own it if you can, because that's exactly um, the reason we hedge. Whatever your risk is, we put the hedge on. That way you don't have to guess right. So if you're going to hold it, if you're going to store it, keep it put. If not, if you decide to sell it, there are some really, really good opportunities now to go out and buy long-term calls. When we're sitting here at 5-year lows, nobody wants calls. So that's the silver lining to these prices. And also, too, if you're an end user, if you use a lot of wheat for whatever reason, or if you use a lot of corn, the market's almost daring you to buy calls here, because everybody's extremely bearish. The herd's very, very bearish. There's not a lot of good fundamental news out there, i.e., I'm talking about supply and demand. We're well supplied, and we're on our lows here. So that's exactly the time where markets can turn. I can't promise you they will, but we'll see if we can get something moving here. There have been some concern that there was going to be a bigger frost across the country. We didn't get it. Areas in the Dakotas and parts of Nebraska did freeze, north of the river. But for it to really impact corn prices, we needed it to go through Champaign, or Illinois, Indiana. We needed something like that. So in the meantime, we do have the funds that are short corn. They did buy back about 20,000 last week. Previously, they bought back about 30,000. So they're getting ready to pull the trigger. If they have any reason at all to cover their corn shorts, they will. And that may be the saving grace for unprotected bulls who are undersold and have not sold anything. If we are able to get a push here, boy, you want to be in position to reward it. Moving on to the other markets, the protein complex. Cattle higher across the board. December fat cattle finished the day up just a tick, 237.5. October feeder cattle finished up a buck 25, 359 and change. It did back off its highs at one point. We looked like we were going to take another run at taking out 362. I would say the levels to watch in October feeders. Last week's high 367 and change, and then the contract high at 369.30. If we can push through those, it's going to be just like what we've seen for the past 10 months, where we'll be getting new highs and new people coming into the market. If you look at the lean hogs, again, new contract highs in April, 93.775, finished today up at 93.70. You can go all the way out to July of 2026. It's trading 102.80. Again, so the hog market is telling you that, there's not enough hogs out there. Everybody wants to own hogs. They're giving you good opportunities up here. So this is where you want to look into maybe reaching out and doing some longer term hedges that you normally wouldn't do. The market's giving you a great opportunity. I'm looking at June of 26 hogs right now, trading 103. You go back until the middle of July, we were trading at 95. And if you go back to April during the tariff tumble, as you want to call it, we were sub 89. So a great revenue bump for hog producers. You don't have to call a top to set a hedge. You can protect a big chunk of that revenue with a hedging strategy. If you're looking for help in that area, give me a call, 312-638-8868. All in all, pretty good Monday. We'll see if this is just another head fake or if this market has legs. You did get new all-time highs in both the NASDAQ. You've got the S&P sitting at its highs. You have the gold market, 3685.7, 3,685. You're going to start hearing about gold 4,000 on all the TV shows right now. So that's what's coming up there. You do have it about 11-year high in silver as well, traded as high as 41.78. Again, so remember, it's nice to have these high moves. The problem is when the correction comes, and nobody knows when the correction comes. When the correction comes, you will want to have a strategy on where you've captured as much of the rally as you can, especially when it comes to your row crops and your animals. This is Chris Robinson. Have a great day. Thanks for tuning in.